Hi everyone, we're Person and Person, and welcome to your October 2022 market report for Newburyport and vicinity. Rachel, tell us what's happening in the Newburyport market.
So in the month of October, there were 14 sales in Newburyport for single-family homes. The average list price was $1.46 million. The average sale price was $1,097,000. Average days till offer was 8, and average days on market were 25.
So that feels like a little all over the place.
Yeah, and when you look at the listings, and you'll notice this is kind of a trend in all of the markets, some listings sell for list, some sell under list, and then some sell over list. So it's really location dependent, listing dependent.
Motivation.
Yeah.
So as far as condo sales in Newburyport, there were 9 in October. Of those, the average list price was $635, and the average sale price was $622, so a little bit off price. 22 days to offer and 35 days on market. So what about Newbury, that cute little Newbury?
Yes, 5 sold in the month of October, 1.23 average list price, 1.22 average sale price, 13 days to offer, 21 days on market. So
that's a trend up for Newbury, though, in terms of pricing.
Yeah,
but it's a small sample.
It's 5. That's the problem with predicting Newbury or looking at averages, is that it's such small.
In West Newbury, there were 4 single-family homes sold. 804 was the average list price. 801 was the average sale price. 20 days to offer and 30 days on market. So still a good, strong market over in West Newbury. Obviously, 4 homes is a small sample, but I think we're continuing to see people look at the outer suburbs of Newburyport and in budding towns
for value.
Yeah, absolutely.
For sure. All right, in Amesbury, a little bit different. It's been the outlier for the whole year.
Busy.
Yeah. 12 single-family homes sold. Average list was $662,000. Average sale was $668,000. 23 days till offer, 40 days on market. Now, I looked at these specifically because I was like, really? Like, the over list was so, there was a difference between the other cities and towns. And what I found, like I said in the beginning, was that one of the listings went for $100,000 over, and then a bunch of them went for list price. One of them went under list, and then another one went $50,000 over, kind of all over the place. Really interestingly, it's all over the place.
Plus, the other thing you have to keep in mind is when we give you these average sold price for last month, think about this. Those houses probably went under agreement in August.
Yep.
They didn't go under agreement in October. So what we're going to see is lagging data now. We're going to see if the market is going to retract at all or appreciation is going to slow. We're looking in a rear view mirror for comparables. So it's really important that you work with somebody who knows what is happening actually on the ground, because that is not indicative. The prices are not increasing at the same rate they were 6 months ago, which is what we usually use for comps, is 6 months. So you almost have to adjust down a little bit so that you're competitive.
Yeah, for sure. I mean, when I'm doing a CMA now, I'm only looking a comparative market analysis, a pricing analysis for a property. I'm only looking at maximum 2 months out behind, and then I'm listing the price under that, because we have to compensate for the rising interest rates, which nationally are over 7% now. So it's important to understand that.
So condos in Amesbury, it's still a great market over there. 12 sold, 608 is the average list, 622 is the average sale. So they're still breaking price over there. There's a couple of wonderful new developments that are going to buoy that market.
Well, that's what that is, because the average price for a condo in Amesbury is not in the 600,000s. Normally it's in the 3s or the 4s, but a bunch, like we've talked in months past, sold on cutters at Bailey's Pond, which is
Bailey's
a
Pond.
new townhouse development. I think that like half of those were from Bailey's Pond, and so that's why, and their average price over there is in the 6s, so that's skewing the data a little bit. And then obviously the overlist, like we've said in the past, could be for potential upgrades that people paid on the new construction. So this month it's a little skewed because last month we didn't have any sales from them. So, and then 24 days till offer, 58 days on market. And what else is going on in the market? What things are you seeing? What aren't you seeing? What's happening?
Well, what's happening, it continues to be a varied interest rate story, much more complicated, as an industry leader said to me, for the last year or so, agents have been writing offers that were basically a 3-piece puzzle. You found the house, you got the money, you write the offer. Easy to do. Now we're more like a 12-piece 3D puzzle where there's appraisals, there's timing. We have one right now that we were timing trying to get the sellers into another house. Things that sellers would not have even considered 4 months ago.
Yeah, because it wasn't their problem because they had so much competition. It wasn't. Yeah. It wasn't even. Yeah.
They had
conversation.
So many suitors.
Yeah.
Yes, they had so many suitors that they could pick and choose, and that is not the case. I think of the 3 or 4 that we've put under in the last couple of weeks. They all have been negotiated, or a little bit, or they've had inspections, or they've had home sale contingencies. So,
or in my case, home sale contingencies, seller concessions, and inspection.
Yeah.
And a reduced price on the offer.
Exactly.
So,
but the other thing too you have to understand is that if you're talking to someone and they say, I'm just going to wait, you really need to get granular on that and think about for yourself if that's what you want to do, that the interest rates could be 7, 8, 9% going forward.
Well, they're already nationally at 7%. We just know local lenders that have lower rates. So to us, we're like, interest rates aren't 7%. They're 5.5. They're 5.99.
Right.
But if you go, to a traditional mortgage broker, we've talked about this a bunch. So, but
no, but I think it's really important right now that consumers realize that there's a lot of ways to get into a house that are not what you saw a year ago.
Right.
So you can have paid closing costs. You can have prepaid buy downs of your rate by the seller.
Yes.
And there are banks, and Raveis Mortgage has one that prepays for the first 2 years. So you have a lower start rate.
A 2-1 buy. It's called a 2-1 buy down, which you buy the rate down 2 points for 1 year.
Yeah, you're basically paying the interest in advance.
Yeah, there's a cost for that, and then it would revert to whatever the original interest rate was. They have 3-2-1 buy downs too. There's a bunch of different products out there, but I think the most important part with anything like an ARM or a 3-2 or a 2-1 buy down.
Wait a minute. Real speak. ARM. ARM. You want to tell them what the heck you're talking about?
An adjustable rate mortgage.
ARM.
Is that if you're getting any kind of like discount on your mortgage in the beginning, an adjustable rate mortgage in the beginning might have a lower interest rate. You need to be comfortable with, if that goes up to 2 percentage points, that you can still pay it. I think that it's very, very important to be, a cautious and educated consumer when it comes to these different loan products, because they're complex. It's not as simple as, it's a 30-year fix with 20% down. But
I mean, personally, if I were buying something right now, I would get a 10-1 ARM, which would mean that it would be adjustable. It would be set for 10 years, and then the most it can adjust is 1% per year thereafter, or 2% per year, depending on the program. So you've got a 10-year window. That's a pretty good amount of time. I would not be going out and getting a 2-year ARM or a 1-year ARM, because the rates could be higher in a year or two than they are right now. So, but the bottom line to all of this is that this is a subtle, complicated process now, and you need somebody on your team, like us, that know how to advise you how to get the best deal for your particular situation, and everyone's is different.
The conversation is, and I just did a video on TikTok about this, I'm just going to wait for the market to crash before I buy it. If you're waiting for the market to crash in Massachusetts to buy a house, let's do some math and see what that would actually look like. As of July, the median home price in Massachusetts was $610,000. With 10% down now, 5.5% interest rate with an FHA program, which includes $1,000 in closing costs. DM me for more information because I have buyers that just got this. You would be looking at roughly a $3,100 monthly mortgage payment. If prices went down 20%, that median home price would look more like $488,000. With 10% down, that would be $439,200 for loan amount. Mortgage rates are predicted to go into the double digits. That's the mortgage payment you're looking at. $700 more a month. They don't go down at all and we still hit 10%. Over 19% decrease in value is then considered a crash, right? Mm-hmm. Anything below 19% to 1% dip in value would be a correction. But I think it's just, most important is finding a home that you're comfortable with. If you're not comfortable buying now, don't buy. But at least be aware of what the risks and rewards are when entering the market or not entering the market right now. I think that's important.
Yep, absolutely. So reach out. We would love to help you in your home search. And this November has been phenomenal so far.
Yeah.
It has just been the most beautiful November. And I can't believe Thanksgiving is in 2 weeks. But,
oh my God.
But everybody have a great November.
Thank you.
Thanks so much.
Bye.